Hey everybody, it's me, the Einstein of Wall Street, from the balcony at the New York Stock Exchange. Trade like Einstein for Money News Network. Wherever you get your podcast, go check out Money News Network. Listen, I tell stories about finance, about food, about fashion. I like to tell stories about people who are sort of really breaking barriers and changing the course of mighty events, kind of like Superman in a funny way, right? Look up in the sky, it's a bird, it's a plane. It's my man, John Garner. Welcome to Stock Exchange. Welcome.
Peter.
John is the CEO of WeShop, company that just went public on NASDAQ on Friday. No disrespect to NASDAQ. We know eventually that things will change, but that's all fine and good. Anyway, at the end of the day, the environment here. So we're talking to you on midweek, on November, Thanksgiving week in 2025. We know this year, everything possible has been thrown at this market, right? And yet the market trades at record highs. The last couple of weeks at best have been a bit on the volatile side based on government shutdown, interest rates, all that kind of stuff that's really sort of almost spooked the market in a way. We know this whole story around NVIDIA and Palantir and the stocks going up and down and all that, and this AI bubble story, which is absolutely ridiculous. At the end of the day, the story of what a person can do globally in business and then list a company is fascinating. And we know that the IPO market is starting to get traction once again. Look, I've been here, I've traded more IPOs than any broker in the history of Wall Street, right? That is one of my great claims to fame. And for me, it's one of the most exciting things because what it does is it identifies a confidence in the market, right? Why would somebody invest in a new company that does not particularly have a track record? And so if the environment and the landscape is solid and the sector that they're in is good and there's a good story behind it and the team behind it is one of integrity, then that's where you start to get traction on the company. And that's, look, there can be, there are companies that come out and they skyrocket in the first day and then they sort of settle in. It's a matter of sector, it's a matter of timing, it's a matter of the landscape of the market, and it's a matter of the team behind it. For me, I'm a people person, I'm a humanist. And so, I met John the other day here on the floor and I knew immediately this was somebody that I wanted you to be able to hear his story. So welcome to Trade Like Einstein. It's such a pleasure, man.
Thanks,
so
Peter.
look, we know that there are a number of, you all have choices, right? You have choices on where you shop. Retail has gone through so many things since COVID, right? There's brick and mortar. There's a lot. Online shopping is obviously, is a huge quandary in so many different ways because after COVID, a lot of people just started going e-commerce, became the biggest flavor of the moment. It became the biggest deal. And all of these online shopping sites have popped up. Not that many of them have gone public. Some of them have, in fact, we know that. But at the end of the day, it's a matter of the product, integrity behind it, obviously policies around return and all that stuff. But this is a company that is doing something different than ever before. I'm so happy you're here. Give me a little breakdown. It's called WeShop.
It's called WeShop.
Okay, and you're from across the pond.
We're across the pond, so I live on a little island called Old Jersey.
Old Jersey, is that what it's called? Awesome, okay. And so give me a little breakdown on, give me a little bit of your background.
Yeah,
so before you were in WeShop,
so my background was worked for a small private equity company in London, doing small cap deals, typically cash shells and then doing reverse transactions into them, or SPACs as they're
right. Okay, that's what you you call them cash shells.
Cash shells. Yeah.
Okay, wow.
So everyone always talks about SPACs.
Yeah, SPAC. That's a little more descriptive of what they really are.
Exactly.
It's a shell. I mean, people know what SPACs are. So look, they're always looking for different ways for companies to go public. Obviously, there's NASDAQ, there's the NYSE. We now have NYSE American. There are any different platforms where you can go public, but it's a matter of valuation, right? 250 million is basically the baseline for the NYSE, although now with NYSE American can go as low as 10 million. NASDAQ was one where a lot of the tech went public because at the time they had high revenues, low valuation, and that was where NASDAQ's rules, made it more accessible for them to go public on that platform. And then they're always looking for new instruments for people to invest in. Now, SPAC is an umbrella, it's a shell, right? They call it across the pond a cash shell, which is a great way to describe it. It's an infrastructure that was already established. It's gone through all of the due diligence as a company needs to do to go public. And then what they do is they absorb companies and put them inside of that shell. They've done all the infrastructure, and then companies don't have to have all that capitalization, all those different things. And then they absorb companies and they trade within them. What ended up happening, like like everything that's worked out quite well, is they overdid it. They put on too many SPACs, and then they did not actually have enough companies to put inside the SPACs. And so SPACs came out at $10, right? For a while, they just traded at 10. Then they became exciting because it became a way of people to sort of get involved in for companies to go public that wouldn't necessarily ever go public before. But then, and so they went up 10 and a half, $11. They started to have some traction and some wonderful volatility. And then it turned out that they kept coming out with SPAC after SPAC after SPAC without realizing that there were not enough companies that they could put
good
inside that
companies.
Good quality, exactly.
Yeah.
And so, okay, so that's what you did before, and then keep going.
Yeah. So I think what I saw in London it was the beginning 10 years ago of the retail stock market, where we were seeing high net worth people typically, but then starting to get involved in small cap stocks.
Okay.
So that was suddenly very interesting. And I think, we always say, or I always say, that the retail institutions are the biggest financial institutions because they're following what they do. So some friends of mine were...
You mean just shopping in general? I mean, look, it's all about trends. It's all about what you know. Yeah, okay, I got it.
So then some friends of mine, they were involved, early investors in Facebook.
Okay.
So we were listening to that story, and it suddenly got me thinking, going, well, hang on a minute. The people that are the users are creating the value in these companies, but they're getting a free platform, and these are amazing companies with amazing platforms, but they're not actually getting a financial benefit from the valuation which they are creating in those platforms.
So think about that. That's amazing, because look, think about, for the longest time, Facebook came out, it had millions and millions of users, but there was the business plan was not clear. There was no clear path to prosperity in this thing. Yes, I can just say anything or put anything out on the market. I mean, for a while there, I was thinking when Facebook was struggling initially, like, all they have to do, they've gotten millions and hundreds of millions of users. Everybody wants to be there because they don't want to be excluded. All they have to do is basically, and it's free, right? All they have to do is basically charge people $1 to be on the site, and they would have $1 billion. But that was not what their plan was. Their plan was to create. Obviously, data is what is gold, right? People's buying ideas, what people say. That was what's fascinating about Sveta, is she's basically out there scouring the internet about what people say. We saw it when I got COVID very early on. I was one of the patient zeros, March 15, 2020. And that was a place where, while it's just a place for a lot of chatter and stories and whatnot, it actually has a potential to be a very powerful tool, right? I was part of a group called the Survivor Group, of people who were basically, very often you'll go to a doctor who does not have experience with a new thing like COVID at the time. We were able to learn so much more about the trajectory of COVID and the symptoms of COVID and what the future looked like by hundreds of thousands and millions of people telling their story. Right? Telling your story is the ultimate, it's the ultimate, it's gold. It's the ultimate tool, right? It's amazing. And so, buying habits, what people say to each other, because people talk about those things. That's where the thing is.
I think, Peter, you've hit something very relevant there in terms of people talking to each other. So one of the other parts of WeShop, other than being able to buy things, is our community can recommend products to each other, and they're not getting paid for doing that. So we see adverts all over the place, and the celebrity is getting paid for that. Of course they don't use that item.
They don't even use it, but they're recommending it. So, and there's no integrity in that kind of a recommendation.
Exactly. So what we're saying is peer-to-peer recommendations are the ultimate recommendation, and no one's getting paid for it. So the person so if you want a bottle of wine, and you can ask our community a question as well. You can say, I want to spend X amount on a bottle of wine, or I want to go on a holiday, or whatever it is. And funnily enough, what we saw on our pilots is friends do actually help each other.
Friends helping friends. I love that. So that's so powerful. So it's not only a buying platform, it's a social media platform, because people are talking to each other.
Exactly. I think TripAdvisor for products.
Right.
But they're your friends.
Yes,
so everyone's recommending. So everyone's winning. The retailers
They have no axe to grind besides the fact that this is something they bought because they like it. Look, I always talk about this too. We are the greatest consumer generation of all time. We are very loyal consumers, right? When young people will come in and talk to me about what stock should I buy? Well, you've been around Einstein for a while. What do I say? Walk down the corridor in high school or in college and see what shoes they wear, what sneakers they wear, what phone they're on, what computers they use, what they do in their spare time, what social media they're on, and then you'll be able to get a sense of what is popular, right? Great. And look, at the end of the day, what are they? You're going to come out with a Nike, an Apple, a Facebook, an Instagram, or whatever, or gambling, or on online betting. That's such a powerful thing, right? Is the sense of what and we are so, look, the funny thing about it is we want what we want when we want it, right? We are like on Instagram. Instagram is an amazing shopping tool. We'll order something for $20 and then spend $40 to have it delivered quicker, right? How much sense is that? One of the things I talk to younger people about, which I'm going to link into what you guys are doing that's different than everyone else, is I talk about investing in stocks and not stuff. All right, as I said, we're the greatest consumer generation. We love to buy stuff that goes down in value the minute you buy it. We have closets full of things that at the time we had to have it. These were not investment. They were not investment tools or investments on their own. They were just things I wanted to buy, whether it was sneakers or clothes or whatever. Or, look, the bottom line is most things we buy, like there's a great old number. This is one of the things recently. I did an interview with this guy, iShowSpeed, who is the largest influencer in the world. And I talked about the fact is that Apple now has 17 versions of its initial phone. And that every time the next phone comes out, we have to have it because it's got another this or another that or another camera or this, right? Even if my iPhone 16 is not broken, I'm going to spend $1,000 on the next iPhone. Now, if you think about it, one of the mindset that I try and teach younger people to do, which I wish I had known when I was younger, is that we don't necessarily need those things, and that if we invest in our future, now that the market is accessible to everyone, and you are taking advantage of that, right, in your model, and we're going to talk about that in a second, if every time the iPhone had just come out with a new iteration, instead of buying that one, I bought 5 shares of Apple stock, and I'm not recommending Apple stock, even though it's one of the greatest companies in the world. I would be sitting there with a beautiful portfolio of Apple that's gone and split and buybacks and all that over the last 20, 30 years. As opposed to a drawer full of 17 broken phones, right? And so you think about that. Same with you. So we're going to get a perfect explanation, because if I use a credit card or I use an online site, they're going to give me brownie points for shopping with them, right? Or a credit card gives you reward points, rewarding you for using their platform. They're making money on processing fees and all that kind of stuff. What you're doing, and I want you to go into depth on this because it's frigging genius, is you offer points as well. They're called We Points, but they're not convertible to cash. They're actually, for the first time in history, convertible to shares of your company.
Of the same class. There's no special classes. There's no special voting rights.
Explain how that works.
So what happens is you go to our platform, you can go onto any of the retailers which we've got, you click the button, it takes you to the retailer, do your shopping as you would on the app. We're tracking that, so we find out how much you spend to that retailer. The retailer feeds us that data back, which is fantastic. What we then do is we allocate you a number of We Points. So the We Points depends on what we
based on the value, or
it's based on, we call it the share back rate. So let's say the share back rate, every retailer is different. So if the share back rate, easy maths, is 10%, and you spent $100, you're going to get $10 of WeShop stock at the previous day's VWAP. So if the price is up on the day, you're already even more in the money.
Not only have you just shopped for something you wanted, you're immediately a shareholder in this company, and you just made VWAP. You're building your portfolio. Amazing.
Absolutely right. So then what happens is, the more things that you're shopping, the more We Points you're accumulating. If you refer a friend who makes a purchase, you get 5% of the value of their We Points that they get as well.
Wow,
so people with followings can really build up their pot effectively. Then after 13 months, what happens is the We Points flip into A shares, and then we will deliver the A shares, whether that's to a brokerage account in certificated format, or we're looking at some other options at the moment. But we've got 13 months from last Friday
to figure that out, because I just was speaking to Sam at Charlie Schwab, and she said that one of the things that she was still pondering over all weekend long was, how does that actually happen? Right. So think about it. It's easier said than done. You obviously worked really hard to get the regulators to agree to do that at first, because you could look, converting stock, right? There's a lot of regulation around giving away shares, buying shares, all that kind of stuff. It's not easy. Right. So what you're saying is that people can shop, they can recommend things. They get their We Points at the end of the year. It converts to shares of your company, which you've allotted 50% of the outstanding shares to the giveaway. Right. Okay. Which is incredible. I mean, if there's never ever a vote of confidence about your platform, about your team, about your people, about your integrity and your character, what is, right? You're fueling that. It's a self-fulfilled prophecy, which is amazing. So how does that work? Do I have to open up a special new account? Can it go into my existing 401k or my whatever?
So where it sits at the moment is we do have the ability to put them into computer share, or our transfer agent, and then your broker would be able to go and get them out of the computer share system. We are looking at some other ways, some other extensions potentially of WeShop. So WeMoney. Where we could potentially have our own brokerage accounts and give people access to funds and whatever it is. Because one of the things that we wanted to do in the pilot test and we really care about is creating generational wealth.
Right.
Because there's a zero investment cost, as in a cash cost.
Yep.
And so again, during our pilot, we had a lot of women using the platform, a lot of mums. So they're doing their shopping, they're getting points, which may be worth something in the future for the benefit of their children. So in the future, it could pay for education, it could pay for housing, and it's a zero investment cost for them. So what we're really passionate about is creating that generational wealth for people, if we can, and the people that will shop it more, that use it more, the more profitable the business becomes. Hopefully the market would see that and it increases. So we want to. Some of the things we need to do, we need to educate. The great thing about the United States is there's a much bigger understanding of stocks and shares than in fact the greatest. I would say. It's
one of my biggest motivating tools here is, and this is things have changed over the last. What happened during COVID was that this place was a party that nobody was ever invited to except the 1% of the 1%. And then suddenly, with the advent of Webull and Robinhood and these things, these free trading apps, the accessibility became open, right? Everybody with an iPhone and $100 or any phone could invest in the stock market. One of the problems was that there was no educational component to this accessibility. I always use the funny analogy. It's like, okay, you were never invited to my party, right? And everybody wanted to get into the party. And then suddenly, okay, the red rope is down, you're all invited, but I didn't warn you about what goes on at this party. Like that if you drank 12 shots of vodka, that you were going to get sick and be sitting out on the corner, not feeling particularly well. Same thing here, that there's an educational component to it. People need to understand that. But you know what, look, creating financial wealth, right? Financial education, financial literacy, it's a term that's already a little bit jaded, it's overdone. But at the end of the day, getting people to invest in stocks and not stuff. You are actually going to take my tagline to a whole nother level, because by investing in stuff, you're actually getting stocks.
So this is the problem I've got, Peter, with my wife. So my wife doesn't shop anymore. She invests.
She invests. That's right. There's that funny,
dangerous.
There's a funny old joke that says, this a couple and the one partner said that they lost lost the credit card, and so a couple of days later, I'm not going to say whether it's husband or wife because I'll get in trouble for that. How are you, sir? You want to walk by? Go.
No, I can't wait.
Okay, good. Did you report that I lost the card? And so the whoever it was, the husband, no disrespect to men and women, no, actually, whoever stole your card is spending a lot less than you are, right? So I never reported it. Same kind of a thing. She's no longer shopping; she's investing.
Exactly.
It's such a great mindset.
Yeah, and I think it's been such a hard, quite rightly, journey with the regulator in a good way, because we want to be transparent. And again, there's no disrespect to Bitcoin and all those cryptocurrencies, but they NASDAQ or even NYSE, they're the most regulated markets in the world. So we as a company have to have that trust to our user base and show that everything's being done properly. We are deemed to be effectively selling securities for the consideration of someone pressing the button.
Correct.
So our legal team at Kirkland & Ellis, we've got the best lawyers in New York, we've got the best lawyers in America, and we spent the money to do it properly, because like you said, no one has ever given 50% of their business away on a regulated market in the United States of America. Now, was it worth all the money and the time and the effort? Yeah, because we're on the dance floor now, so we can have some fun.
And what's so fun about it is suddenly, look, we always talk about that. What is it going to take to get people to start building a portfolio? Right. We always wear a lot of bling and we wear nice clothes. And when I'm talking to the younger investment community, this is the next generation of investors and traders. Right. And so how do you get them to understand that what they buy could potentially go up in value? Right. So what you're doing is, and it's not an easy. Look, it's a real challenge. Because people like immediate gratification.
Of course.
Right. There's that number that people say that if you put $250 into the S&P 500 every month from the age of 18 to 60, you'll have more than $1 million. it's an amazing number, and if you can get somebody to understand that, they're going, oh my God.
Yeah.
But the 60-year-old part is a little bit not that sexy. They love the $1 million part of it, but people want immediate gratification. You are kind of helping with that situation, because by shopping, they're actually immediately being tracked to the market. There was that thing that came out a little while ago called Acorn, I think it was, where it was a roundup.
Yes.
So if I go out and buy a coffee for $3.20, it's like it goes back to your grandfather used to have a jar on his night table where he used to put his change.
Exactly.
And if you waited long enough, that would build up to be exactly you could pay for your holiday. So Acorn came along, and I'm not endorsing Acorn, but it was a smart way, because we've lost connection to these little things that were part of our lives. You are actually forcing people in a good way to actually understand. So yes, they're getting shares of the company, but you're also, it's a way bigger story than that, because you're actually explaining to them. They're going to see. My dream was that kids would walk around, as opposed to wearing all these nice fancy clothes and whatnot, they're going to be able to sit at a party showing each other their portfolio.
Now they can do both.
And now they can do both. They bought themselves some nice stuff, and they've also got shares.
Yeah, exactly.
It's, so what were there a lot of impediments to getting this done?
There were a lot of rules and regulations we had to go through. It's been a 2-year process. Because we're breaking new ground, and quite rightly, the authorities want it done properly. So certain things are being done for the first time, and we were absolutely on board with that. But now we're where we are. We want to work with more retail partners. We've got some of the top retailers in the United States on, but we need to now tell the story and bring people into this community which we've created, of which you are now part of. Peter.
I'm so excited. Look,
and the more people that can tell the story, the better, because at the end of the day, it's not our intention at the moment to spend $100 million on an ad campaign, because that $100 million is coming out of your company.
Exactly.
So what we want to do is we want people to do it, and hence the referral. If you refer somebody and they purchase, they get some shares as well.
They get it as well.
So it's a non-cash item that we're effectively giving to acquisition and retention. So what that means is that when we're getting paid by the retailers for advertising or the affiliate commissions, that money is staying in the business, which then hopefully the market sees, applies a multiple to, and who knows what that might be.
Your timing was good as well.
And then it creates a value. So what we're obsessed with is running a really tight ship in terms of costs for the benefit, because if the market sees it and maybe the share price goes up because it's being more profitable, then that's the best message to any shareholder you can have, because it's being run properly. It's it's running on good margins. It's being run to the standards of NASDAQ and the SEC, and we just need as many people in the community to see what we're doing and understand it. There are no catches. It doesn't cost anything to sign up. You sometimes get those questions, where's the catch?
So it sounds too good to be true.
Exactly. Exactly. So we saw that in the United Kingdom, and some people, like you say, did want that immediate gratification. Everyone's locked up for 12 months from listing date, and actually that lock-in's your friend.
So of course it is, because look, you're hoping that the company is going to grow, and you would think. I mean, it sounds like though you've made every effort to make that happen. Right. You're not taking people's money with a wrong motivation. And then the hope is that along with the growth of the company, and the growth is going to be basically tied to how many people start shopping online, and then bringing in more not affiliate but more partners, retail partners. Right. So you're basically creating a marketplace. Look, the marketplace concept is so genius in so many different ways, because think about it. If you're a retailer and you open up a brick and mortar, your costs are outrageous, and that's why, like farmers markets, it's basically you're paying for it. It's like a SPAC. All the expenses are being done under an umbrella, and then everybody gets to be inside of that. You're plugging into that network, taking advantage of the footprint of that, and so you're not wasting a lot of money on that. You're basically able to put that money towards better relationships with your customers. Obviously, better relationships with customers, being able to become partners. Now, everybody who's buying on your platform is suddenly a partner and a shareholder. And that's so exciting.
It's a community. And if you think about it, so with our platform, we don't touch any of the goods. We don't touch the money that you're using to pay the goods. We don't touch any of the returns.
All the fulfillment's done.
Everything's
done.
Is it being done?
By the retailer. By the retail themselves.
We don't touch any of
There's no
We don't touch
one
anything.
spot fulfillment center.
No.
You're not doing
No.
any of that.
Any of
That's
it.
the mastery
No
of a
returns.
marketplace.
Yeah, exactly. We're the middleman or woman.
Right.
That's what we are. But
and so the individual, let's say, return policy, for instance.
Yep, so if they return the item to Bloomingdale's, they just return the item to Bloomingdale's. What happens is Bloomingdale's would return the money, Bloomingdale's would tell us that the transaction has been denied,
Right.
and we'd knock the we points back off.
Okay,
and that's
gotcha.
why there's the cooling off period, of 13 months, because it might be you take the item back, then we need to change your balance.
Of course.
Otherwise people try and game the system
Yeah,
and
of
stuff
course.
like that. So all their infrastructure is with the
There's always
retailers.
somebody trying to game a system.
Yes, there are.
Yeah, it's
We had
amazing.
some amazing ones in the pilot. Someone tried to buy a £500,000 holiday and then cancelled it and thought they'd get
they
the
were going to
holiday.
get the points anyway. You always got those.
Yeah.
They're not the ones who've thought it out.
Yeah, exactly. They got red carded.
Yeah. Well, there's a funny, I don't know if you watch Seinfeld. You know
Yes,
who Seinfeld?
yeah.
So there's a funny, one of the episodes is where they're Kramer, who's sort of the crazy guy, is thinking they had to take a trip somewhere, and he says, well, he figured if he could buy the tickets and return them, that he would get the flying, the frequent flyer miles,
Yeah.
except that if you cancel it, that gets canceled, and they end up, the whole thing blows up in their face because that's not the name of the game.
The other thing you're just saying about that as well, and to people trying to game the system, what's really great, Peter, is that if you want to get your shares at the end of the day, you've got to be a real person, right? Because you've got to have a brokerage account, which means everyone on our platform is a real person. So imagine the retailers want to advertise on all kinds of platforms.
Right.
There might be bots on those platforms.
Yeah.
There might be unsavory people on platforms.
Yeah.
Everyone with us, they've got to be real. So you
because
can't
at the end of the day,
they won't
going,
be.
right.
Exactly.
So look, in the old days, one of the things I also talk about is that in the old days, in order to invest in the stock market, you had to be an accredited investor.
Yeah, absolutely.
Okay, and that meant that you had to prove, back in the old days, your grandfather, your father or your grandfather, depending on how old you are, had to prove that the money they invested in the stock market, if you lost 100% of it, that was the question you were asked on the form. If you opened an account with Merrill Lynch back in the old days, you had to prove that if you lost 100% of this value, would it affect your standard of living over the next 5 years?
Okay.
Only super 1% of the one could ever say that,
Exactly.
right? So what they were trying to do is protect people from not realizing this was a get-rich-quick scheme.
Yeah, of course.
It's the same thing with you. You are
Absolutely.
look, at the end of the day, if you're offering someone value
Yeah.
and shareholder value, then you want to also protect them from the potential downside as well.
Absolutely.
Yeah. Well,
Absolutely.
there's no guarantees as well.
Exactly.
You could buy them today. You could buy something today.
Yeah.
You're getting shares at the end of the year
Yeah.
at today's price.
Yeah.
You're not guaranteeing them that
Absolutely not.
it's going to be
Absolutely
trading
not.
higher
No.
at a later. This is not the 2008 and 9 mortgage crisis, right?
No.
Where they told everyone here, you know what, you don't have enough money to buy a house. Take the house; it'll be worth more in the future. You're not doing
No,
that.
absolutely not. And we've always said we're very clear that we're not giving investment advice.
Right.
We are simply giving you these we points, which
Right.
they might be worth nothing, Peter.
Right, yeah.
And then what have you lost?
Now, do I have a choice to convert to cash or to
No,
we points?
at the moment,
it's only right now.
it's only into
Okay,
shares.
gotcha,
It's only into
gotcha.
shares. Look, businesses evolve, as we all know. We're always looking at trends in the market,
Yep.
what the consumers want.
Yep.
Models can change. We've got a good, amazing tech team, so we can pivot quickly. But
Right.
at the moment, that's what we're doing.
Gotcha.
But then it goes further as well. If you think about your monthly spend, so you have to buy insurance, right?
Right.
You have to buy breakdown cover. You have to buy mobile phone telecoms.
Right.
So all those things can be white labelled in the future. So
Right,
imagine
right.
you could have We Insure or We Talk
Right.
Talk,
Yeah,
or
yeah,
we
yeah.
can do whatever
Right,
it is, and we can still do the share back model on that against those white label, because all those amazing companies as well, their biggest problem is user acquisition, and that's the biggest cost for them. So if we've already got the users, and you do use a mobile phone, and you do buy insurance, and you do buy all these things, well, why can't we do that? And then you're putting it through the community to boost the value of the shares you already own at zero investment cost.
So if you ever watch Shark Tank, right?
Yeah.
The one thing that Mr. Wonderful always says is, what is the line? The customer acquisition cost.
Yeah, exactly.
What does it cost? Look, if I have a product and it's a subscription model and it's a box and it costs $20 to make it and $100 for retail, right? And so net I'm making $80. What is the cost of getting that customer?
Exactly.
What you'll often find is in this world is people use Facebook ads or Instagram ads or whatever, and very often you will see people spend $1 million. They'll say, "So how much did you make last year?" Well, I made $20 million.
Yeah.
Were you profitable? Well, not really. So then how did that happen? Well, the bottom line is I paid $25 million to acquire those customers. And eventually I hope to make money.
Yeah.
What is your cost of he obviously he's brand new, so you haven't figured that out yet.
But our customer acquisition cost is basically, we're going to be doing a number of events, educational events, brunches,
Right.
being around people. So our
It's going to
acquisition
be a
cost,
little organic.
yeah, so our acquisition cost is basically the cost of putting those events on. I mean,
Right.
it's so minimal potentially when you look at the forecast, and can't talk about forecasts because we're not doing that in the market. But if you look at what the cash customer acquisition cost
Right.
is, it could be very low. And then if you think what's the lifetime value of the consumer,
Right.
it could be very high.
Yeah.
So no, we're totally with that, and that's why a lovely story. Someone offered us to have a very small sticker on a very big car.
Yeah, right.
And so they said, oh, and you get to meet this person, you get to meet that person, and all the rest of it. So I said to him, it all sounds fantastic.
Yeah.
Eyeballs and all the rest of it,
Yeah.
impressions and all the things that we know.
Yeah.
And I said, the only problem is, do you know what a multiple is on the stock market? And he goes, no. I said, well, it's a multiple of what you're earning.
Right.
So let's say if we are on a 20 times multiple, so if we give you $10 million, we need to get $200 million of value back.
Correct.
So obviously you'd be willing to underwrite that, wouldn't you?
Exactly.
He never
But
rang me again.
Well, he never heard you. He never heard
because,
from him again.
Because we're taking that money out of our shareholders' pockets effectively to spend on we call it the ice cream stickers.
Yeah. Look, I agree. Look, at the end of the day, it's one of the interesting things working with Sveta is your engagement. The actual what is it? What is the cost? Look, you'll see. A lot of people spend billboards, for instance. So this is something we should chat about too, because I have a friend, a Romanian gentleman, and he has a company called Blind Spot.
Okay.
They basically, it's Airbnb for billboards.
Okay.
They have access to 300,000 billboards all over the world. And now in the old days, when you had to paint a billboard, you used to do it, you'd buy a 5-year billboard, it cost you a lot of money, and you would paint it, and then it was there for 5 years. Well, now they've become digital.
Yeah,
fine.
amazing.
So now you buy still digital space, you put up your artwork, and it's there for a while. Well, everybody's campaign is different, right? And so what they've done is they've been able to orchestrate using AI and using logistics to figure out, okay, well, there's going to be downtime on the billboard, right? Like it's $25,000 for the NASDAQ billboard. I don't know if you guys got the NASDAQ billboard when you launched, but did you? Were you up there on the thing? You were there
even
for the
taller.
day.
I was even taller on the
Right, me too. I've been on that billboard as well. Okay, so what this company Blind Spot does is it's Airbnb for billboards. So there will be downtime, right? I'll rent a campaign for 3 days or for 5 hours, and then there's going to be time in between. And so if you have any interest, and some people have a bigger marketing budget than other people, $25,000 for the NASDAQ billboard is one thing. Maybe I only have a couple $1,000, right? And so what they will offer you is they have a spreadsheet. And they will say, well, you know what? We've got an hour free in the middle of the day that you may be able to use, and it's not being occupied. And so we'll give that to you for a small period of money. And what that does is it democratizes the billboard experience, because it's a wonderful marketing tool in this world of social media. It may not be, look, you may see the billboard, it may be bigger than life, but is somebody actually going to engage you by seeing it? No, they're going to be in awe. But what it does is it offers you is, like we did that with we did a potential partnership with a company, and we put up the billboard, and then we had Matteo came and shot it, and then we were able to get great content off of that shoot. I hope you did the same.
Yeah, absolutely.
Okay, and you'll be able to use that content for over and over and over again.
And I think what we've learned, especially over this last week and with the listing and ringing the bell, which is a great experience and everything, is like you say, that content and the platform of the stock exchange allows us to tell our story. So, allowing me to meet you, allowing us to do this.
It was so exciting.
And it just allows us to tell the story, and then people go, hang on a minute, and then like you picked up on it straight away. But some people aren't as quick as you, Peter. But it allows us to tell the story, and that's what we want to do. And we're so happy to be here, and I brought, as you met the wife and the children, and they're happy to be in America, and we're going to be here a lot because we want to put the effort in. We want to be on the floor, not just on the stock exchange floor, but on outside there, on the street, and just talking to people, telling the story, and going to Texas and going to Florida and going to LA and going to all these places to tell the story what we believe is this retail revolution. And we just got to put the hard work in now and get on with it.
So that's exactly what it is. It is a retail revolution. Your timing couldn't be better, because you realize that we are about to embark on Black Friday, Black Monday, whatever it may be, which is the largest. What?
We Shop Wednesday.
We Shop Wednesday. That should be a campaign.
Exactly.
We Shop Wednesday. Maybe I'll go do an ad for you on my Instagram. We Shop Wednesday, where basically people need to understand that a majority of the money being made by retailers happens on one day of the year. The grandest shopping day of the year is the day before Thanksgiving or after Thanksgiving, right?
It's unbelievable.
Correct. And literally you can make 75% of your profit on one day. That's the number that apparently is floated around. And so that's incredible. You know, look, there's so many different opportunities. We could talk about this forever. And everyone obviously has their choices for where they go shopping.
Exactly.
Right? But it's a matter of, so where's the added value? Right? Everybody can go to Nordstrom's. If you want to go to Nordstrom's, you know, it's a beautiful thing, go. A lot of people do their shopping through e-commerce online. You also have choices on that as well. Look, I think there was a company, a friend of mine was part of a company called Jet, I think, right? Yeah. Jet.com came out, another retailer. I think they ended up getting bought out by Walmart or something. And so, you know, look, the goal for the future is now obviously is to get new customers,
correct,
but also to partner up with great retailers.
Absolutely right.
And obviously you vet the retailers and whatnot,
and they vet us as well, which has been great because we're listed. Obviously now it's great.
Right, now that's a great added value to the credibility of your company as well. Now, is it going to be across all different sectors, food companies and travel? Look, we saw what happened with Costco. Right, Costco came out and it was a retailer that you were able to buy things in bulk. But then they realized that, you know what, this is like a one-stop shopping for everything. You can buy a diamond ring, you can buy a car now, right? Costco's become the biggest, it's wild, right? So it went from just being a bulk purchase opportunity to literally an everything purchase.
Yeah, so we've launched with all the categories you think of, so beauty, fashion, food and drink. Travel's a really interesting one. So we've got Expedia, Booking.com, British Airways, but I think it's really interesting, they're quite high ticket items, so people will spend money on a holiday once a year or on their flights or whatever. So the fact you can get share back on all those
how amazing
things
is
is amazing, and they're big ticket items. So and their share back rates typically are a bit better than say electronics. So it's great for people. So we've got all that stuff, but we again want to work with the retailers and go, look, how can we support you, the retailer? Shall we do an event? Shall we do a fitness event or a wine tasting event or whatever it might be, to work with the retailers to really help, because what the retailers want is they want people recommending their products to their friends. So we're saying you can't pay our community to recommend your products. We are honest. We are. You can't influence them.
So that's where the mastery of your social media component to it is. That interaction is pivotal, because it really levels the playing field. Right. As far as, look, we talked about it before. Influencers recommend things; they're being paid to do that, and you have to announce that on social media. This is a paid partnership.
Exactly.
That's one thing. Anybody for money will recommend anything.
Exactly.
You want somebody who's actually using the product and then recommending it. And I will look. That's word of mouth. It's so powerful. It's the oldest, exactly. It's like telephone. You know, it's like, I mean,
I think one of the other things we've done, Peter, as well, we've taken off on when people post something, we've taken off the ability for people to like it. They can comment on it still, because what we've seen as well on other social networks is a lot of fake liking, and then people are trying to, and people are then trying to use that leverage of those likes, maybe not from real people, and also followers. People get obsessed on how many followers they've got. So we actually took the followers button off, so people can't see. Just be who you are.
So comments are the only way they can communicate.
Yeah, exactly. So
I
comments.
Love that.
So then it's, you know, it's just like, look.
That also levels the playing field.
Exactly. So we take, and in what we've seen, you know, there's a lot of mental health issues in young people where they're chasing online likes, online follows on these networks where you don't even know. Look, you don't know any.
Look. One of the things that I often will talk about. Look, I have a huge social media platform, and I have to be perfectly honest. Every one of I just reached 1 million people on Saturday.
Well done.
Which thank you, and I have to say that every single person in that million was organically done.
Exactly.
You can pay for followers. Right, I can literally. I get attacked by people all day long that they'll, you know, for $2,500 they'll give me 1 million followers or whatever. Look, at the end of the day, it's not the point. It's a matter of it being done organically. People are honest about it, but still, as we said, there's always people going to game the system. And you know, look, fortunately, there is oversight on the social media platforms that you cannot do things that are not copacetic, and they'll flag you. They'll shut you down if you buy followers and do things that are copy and paste responses and all those kind of. Look, at the end of the day, we're living in this really fast-paced world where integrity is like not an A number one product, right? And also there's, you know, there are people who game the system. There are robots. There's you know, using AI and whatnot. There's just there's always somebody out there messing with the situation. And at the end of the day, that's why I always talk about the humanist element. One person talking to another person. that we both know we're humans.
Exactly.
Right? Saying to each, just having a conversation.
Yeah.
You know, I interviewed a woman the other day, and she's doing a TED Talk about how AI and this ChatGPT situation has gotten to a point. She noticed that her father, who is an elderly gentleman who had some mental health issues, who had been going to see a psychiatrist,
Yeah.
and suddenly he stopped going to see this shrink. And she asked him why, and it turned out he was going to ChatGPT for his advice, psychological advice.
Wow.
And she started to say, wait a minute, so it's a trust issue,
Yeah.
right? Like, I'm going to start taking medical advice and things from a bot,
Yeah.
right? And
Wow.
that's problematic.
Yeah.
That's where suddenly this thing gets a little bit scary,
Yeah, I
right?
agree.
Or same thing, look, you're talking about, if you're selling a product online, where and I want to know that the person who's recommending it to me
Yeah.
is another human being
Exactly.
who's actually
Who's
used
verified.
it,
Who's
who's
verified 'cause they
verified,
got
and
it.
they have skin in
Yeah.
the game,
Yeah,
and
exactly.
that's it. And so so you've checked off every box in my book. I'm so excited about the whole idea,
Yeah.
you know, and so look, and it will grow organically.
Yeah.
And the fact is that you're first to the party here.
Exactly.
When it comes to offering people, that everyone needs to understand that. There's a million incentives out there. We live in an incentivized world. Everyone will give you a reason or pay you or give you points or whatever to use them. And look, you still don't know what it's all about, and it doesn't tie to anything real.
Yeah, exactly.
It doesn't tie to anything about growth.
Yeah.
It's just spending more.
Yeah.
And my whole concept about investing in stocks and not stuff is buy something that potentially will go up. As we said, we're not guaranteeing that the
Exactly.
stock's going to be up next
But there's
year.
a chance.
But there's a
you're in
chance
the
that
game.
you're investing in
Yeah.
something
Yeah.
that may go up in
Yeah.
value.
Yeah.
And just alone that way is a level of integrity.
Yeah.
It's a level of perception. It's something that's, that's what's exciting about it.
Exactly. It's going to be an amazing ride, and like I say, we're so happy to be in America. But just as I said, the size, the understanding, the positivity. We're so excited for this journey, and meeting people like yourself, and just getting everyone behind this retail revolution. Because where's the downside?
You know what? There is no downside. And what you're also doing is you're changing this, basically the buying habits and the psychology behind it.
Yeah.
Right now, people are not going to go out there and shop just because they're getting stock, because as we said, there's no guarantee it's going up. But if it really, what's so exciting for me is it's carrying on the message that I've given people, which is investing in stocks and not stuff. You're going to be buying things. In exchange for that, you're going to start to see the value.
Yeah,
The
exactly.
shareholder value of actually owning a share of stock in a company
In a listed
that
company,
potentially could go up in value.
And we want the community's feedback as well, Peter. We want people to go, oh, tell you what, we'd love that retailer, or what have you thought about this feature? Or we want to have our annual general meeting at one of the football stadiums.
Because everybody has a say in it, remember? Right?
You can do the speech.
I will be there.
Exactly.
I will happily be there. That's so exciting to
and
think
bring
about.
everyone together.
Yeah.
And then that's the press, and that's the noise, and that's the goodness that goes with
yeah.
it. So we just want to bring everyone along with us. No one's perfect. We want to know we want to know.
It's going to be forever growing. We're going to learn
and get better and better and better and better. So it's exciting.
You know what?
times.
I want everybody around for the ride. And this is not an endorsement of the fact that, look, I met John instantly. I got the sense of the fact that from your family, from the team, from the idea behind it, you're putting it all out there.
Yeah.
And it's incredibly transparent.
Correct.
And you are actually, sometimes you just think, oh, there's always a catch.
Yeah.
There's no catch.
Yeah.
At the end of the day, there's no catch. You're transparent about it. So it's exciting. So look, it is a retail revolution.
It is.
You are going to be at the forefront of it, which is exciting, and everybody should go check it out.
Yeah, and everyone can be part of it.
And everyone can be part of it. You can now not only be a shopper on this site, you can be a shareholder in this company. Just like that. And you know what? Trade like Einstein. Go where you do your podcast. Money News Network. Einstein of Wall Street. That's all I got to say about that.